Well, hello there, traders. Welcome back to episode 1 of season 2 of the TOGS trading podcast. It's good to be back after the summer break. Clearly, it is the end of a summer because as I'm sat here, I've got hailstones hitting the window to the side of me. Okay, it's only supposed to be September, but anyway, here we are. We're back, getting back into the saddle trading wise, and also in terms of getting back into the saddle with the podcast. Thank you to all of you who took the time to send us comments and thoughts and ideas, okay, for season 2, and we'll build them in and we'll talk more about that later. But as always, if you're joining us for the first time, okay, the TOGS Trading Podcast is all really about transferring the conversations that myself and my good friend Ian had from an afternoon in Keogh's pub in Dublin to actually into a podcast, okay, so we can share our experience and insights with the rest of the trading world. So, without further ado, okay, let's bring in Ian. How are you doing, Ian? Looking good.
All right, thank you very much. Fine, thank you very much. Absolutely grand for a Wednesday afternoon out here, which is not quite as wet here, but the winter is definitely on its way because it's bloody cold. Hence, I'm wearing this massive thing because I think it's an ego thing with me keeping the heating off as long as possible. I think it's just to do with the way I was brought up. Because my mother, in the depths of winter, would open the windows, to air the house, and it used to, always daytime used to be freezing in our house, and I just take it as real, don't put the heat on before 6 o'clock.
It's a very middle-aged northern man thing, isn't it? You don't put the radiators on, you put on another jumper. That's the way it works. Stuff, and we didn't really have much of a summer, so it's a bit disappointing to have hailstones already here, and we're into September itself. But yeah, how was your summer? All right, how was your summer? What
all right. It was all right, but the summers for me are always really about childcare rather than anything else. Because as I said before, I'm the flexible one in my relationship, which means I get to be the flexible one in my relationship, which means I do an awful lot of the stuff. So in the summertime, my son is not in school. He's in camps, but the camps tend to run from like 9 to 2 at the best. And so you get caught up with doing a lot of childcare, which means that you're limiting your time. And when you're limiting your time, it also means that the type of setups, the type of strategy that you're involved in is going to be a lot shorter time frame. So you're trying to make, like, I'm kind of happy with about 10 points a day, really, in the ES, which is achievable basically in around the open. You're going to get something going someplace, and that's what I've been basically focusing on doing when I was in the work context. Was on holidays a lot during the summertime. Like, was gone quite a bit. I was over in Germany for a while and down the west of Ireland and stuff like that. And that again, that's a month that's gone out of the 2 months. So I mean, the summers are relatively unproductive. I mean, people complain about that there isn't the volatility in the summer, which really doesn't affect me as a sort of scalper, basically, as much. So it was a time management. It's a thing that I always have a problem with, which is time management and organization and making sure that I actually have enough time at proper times of the day, because like the best times of the day to trade are 8 o'clock in the morning when you're doing the breakfast and driving your son to his camp. The middle of the day is, in my opinion, the worst for my particular style of trading, is the worst time of the day because the price isn't going anywhere and you can't. When it's not going someplace, it's very hard to read, because if it comes to we'd say support, and even if it comes at 12 o'clock in the daytime, Irish time, GMT, and it comes to support, it can base there for 2 hours if it wants to. And in that side of that base, it can actually stretch your stop loss, because it's still valid, but it's still stretching your stop loss a little bit. So I find that kind of and then again, you have the cash session, which is quite good, which opens at 2:30 here, around that time, a few minutes after it opens, because the first few minutes you can't really tell anything, and you have things you can do around that. You can do the gap close. 3 days of the week, the gap close is generally actually quite good, and not that particularly it's not a particularly difficult trade because you have the statistics. You know how often it's going to work. In fact, I'd say it's probably one of the best starter setups because you have statistics about how often it'll work, which are updated. And then you're just waiting for price to hit. If it was a gap up, you're waiting for under a certain size, under 10 points, you're waiting for price to gap up to a resistance, and you're shorting that resistance, and you have a high statistical probability that it's going to close that gap, and you can short away. It's actually quite a nice handy thing, and that's about it really.
Yeah.
Quiet. It was quiet summer as well, and a very wet summer, cold summer in Ireland. It was the coldest summer in 9 years or something, or the wettest summer in 9 years.
It was a bit of a letdown, wasn't it, weather-wise and stuff? It's a bit, but and mine was cut short as well because I had originally wanted to sort of clear off from basically the last week of July to basically the first week of September. That I kind of penciled in a 5-6 week window of just of a break, getting away and changing it. Part of it is because I needed it. Part of it is because I think this is going to be a very eventful last few months of the year here. Okay, and come back to that more later. But in fact, when I was just looking through my records there, if anything, it got whittled down to about 2.5 weeks in the end, mainly because the end of July, we start to get the unwind of that yen carry trade on the FX markets. Those FX markets went wild. Okay, and I'd called it out in my kind of like weekly session that we've been looking at how the yen was changing, and then invariably we got the news through and stuff, and the world went wild for a few days. And that crossed through currency. So I traded into the end of that. And then I ended up taking a couple of weeks, 2.5 weeks, which was a met up with yourself in Dublin and stuff, and we'll come back to that in a bit. And then I came back a little bit earlier because I was doing some intraday work, or just because of the way markets have been operating and trading recently. And I mean, normally August is an absolutely futile month. After the first couple of days of the month, the last 3 weeks of the month, everybody's the world and his wife are on holidays. Nobody's really interested. And normally, if you would look at the price action of any of the kind of major FX pairs, major indexes, they're normally it's in a little range. But if you look at dollar against, especially dollar against the major pairs over August, we've got some absolutely fantastic moves. All right, and I admit I wasn't part of the majority of those moves because I was too busy enjoying life back on the farm in Ireland, arsing around on tractors rather than basically sort of looking at charts, etc. But it was just a bit of a wild August. And as I said, maybe that is a precursor to a rather wild couple of months. We've got that US election in November. And then I just generally think that actually the next few months are going to be a little bit wild, a little bit eventful. I can't really put my finger on and say, well, it's, because of these statistics. It's just a general sense that that things are starting to unravel a little bit. And when they unravel, they get volatile. And when there's volatility, if you know how to manage that and work with that creates opportunity. So but we actually got ourselves to have a night out in Dublin, didn't we? As I was trading through there, I was going to spread to see it, and not unsurprisingly, we were there in queues with a few of our friends, etc. So that was a grand night out, wasn't it?
It was indeed. Actually, I was just thinking that election that's coming up. That's going to be, I think that'll be a massive thing. I know we have a podcast on about it at some stage, but it's interesting because it's such a culture war. And I think if Johan Harris wins, and it's the only important election, I think, in the entire, it's more important, I think, this year than any Irish election is going to be, because we're just going to get more of the same people again. And I think there's a big culture war going on, and you can see it in your own country, in the UK, with the banning of free speech and smoking bans and all that kind of stuff. And I think if Trump doesn't get in, there'll be more of that, and then there's going to just be more upset. I think you'll have more sort of far right riots and all that kind of stuff. So it's going to be a very interesting time. What that'll do is the markets, I have really no idea, unless prison stocks, if there's any such thing. If you have any private prisons, at least in the US, I know they're private prisons. So we'll see how that works.
Sure, probably. I thought, here's me and the way my mind works is that I thought as there was more volatility and as there was
Mm.
the likelihood of more demonstrations and riots, that the price of personal weapons would go up. But if you look at like Smith and Wesson, all right, their share price hasn't it actually dropped? I think quite considerably. I was
Yeah, it does that a
surprised.
lot.
But
Yeah.
if you're in America, you can go to Walmart and get your AR-15, and Walmart stock has been going beautifully. Has going actually been quite beautifully over the last few months and stuff and what
Mm.
have you. But I am not aware of any private prison stocks that people might want to to
Mm.
take a look at. I'm sure there are. I'm sure there are. All right, it's just not my
Yeah.
that's not my particular bag. But
Well, the
yeah,
gun
I'd agree.
stocks. Oh, yeah,
There
sorry.
is a bit of a culture war. There's a bit of a culture war happening,
Yeah.
and the whole world is waiting to see what comes out of the US.
Mm.
Rightly or wrongly, we all still look to the US for leadership on a global scale,
Oh, yeah.
and it's more of a clown show than a political event these days. But anyway,
Yeah. I was
we'll
going to say,
talk about that.
yeah, just a matter of interest. I don't think you can buy AR-15s in Walmart anymore. I think they got rid of them 3 years ago or
Um,
something. They had to stop selling them just as a matter of interest. You can buy bullets, but not modern sporting rifles. Um, the
I would
second
about
that
the knowledge
betrays a
of
big. Oh yeah, that just betrays my entire political leaning when I call an AR-15 a modern sporting rifle. How would I even know what to call it that? I don't know. But no, the gun stocks are not run like the UK has nothing to do with gun stocks because it really doesn't matter. So you're going to have to expect that Smith and Wesson and Ruger and all those sort of things are going to go down before the election, because if Harris gets in, Harris is talking about banning everything because that's what they want to do. So that means that basically that business is the ups and downs of that business are completely based on politics rather than anything else. Because if you have Harris, so if Harris comes in like, at this next time, what you'll actually have is probably a short-term rise in gun stocks because they'll have huge sales because people will be trying to buy before Harris starts banning because a lot of that stuff will be grandfathered in. If you have an AR-15 now, it's probably going to be grandfathered in. And then they would peak and then they'll have a decline because now they can't sell anything. Once that rush is over, then they can't sell anything. And then if Trump comes in, I'd expect a short term rise, but then it'll come back to sort of an even plane because there's no other reason because Trump won't ban anything. There's no chance of him banning anything. So there's going to be no reason for the stocks to go one way or go the other. It's going to be, and there's no reason for people to rush out and buy, that AR-15 that they've always wanted because they mightn't get it next year. They can put it off. They can put it off like any purchase. And so it'll be very interesting. They're quite a volatile stock actually, and and I always thought that there were of stocks when I used to trade stocks, there were some of the easiest stocks to trade because of that political side of it. You could sit there and read the press and make a determination about what they were going to do. But I don't trade stocks anymore, so I don't follow them actively, except maybe their social media.
And that's it's the thing I've always said to people is that I consider myself an FX and indices and commodities trader, right? That's where my focus is.
Mm,
But I will do a bit of stock trading, mostly investing. But there's no reason why you can't, focus on trading, but also use the skills and knowledge you have to basically follow the stocks you like. Okay, so I appreciate everybody likes to follow US tech stocks, and why wouldn't you? Because the moves have been fantastic over the last few years, but also taking an interest in stocks or rather just in companies that you understand. So I do a Monday market update, and very often, whether they like it or not, I quite often will include like defense and aerospace stocks in there
mm,
because I'm still fascinated by that industry. I'm still
mm,
intrigued by what goes on there, and I'm fascinated to see how let's say it's just another government version of QE by the way they've kind of pushed the money to Ukraine through US defense companies and stuff. But anyway,
mm,
that's a darker tale for a different day and such. But ultimately, we're traders. It's just a case
mm,
of is there an opportunity? Well, that'll do for me and stuff and whatever. But there's nothing reason. I quite often get people. I quite often get people like contacting me and stuff, and they want my opinion on some dubious biotech stock that they saw in the back of a paper, and think that A, they should invest in it, and B, that I'm going to have some fantastic insight into it. I have no idea. I have no idea what most of these companies do, and I think if you are going to invest, you should invest in stuff that you understand, or at least you've got an interest to do the work, right? To do a bit of due diligence to make sure if it's a decent enough play and stuff. But yeah, maybe we'll because we're going to do I think a couple of sessions deeper into season 2 on the run up to the US election, and actually after the US election, what can we expect? Maybe as part of that, okay, maybe we'll have a little look at some of the defense stocks, okay, and weapon stocks, and other stocks which we think could be a bit of a player, regardless of who gets in and stuff. Of course, we're doing this today after the night of the election debate. Did you watch any of that, Ian? Did you?
No, I didn't even know it was on until I turned on. And I knew it was coming up, but I didn't know it was on last night until I put on the Guardian for my morning.
You're such a scalper. Do you know what I mean? You are so.
I don't care about news. I just need to know when it comes out. Just because.
Exactly.
Yeah, because it's the same thing when people ask me about stocks. There's two things I'm going to say about that. When people ask me about stocks, I have no idea. I don't I read charts. That's what I do. So you can ask me about a stock chart, and I'll tell you about the stock chart. I can tell you that it's going to do this, or the probability is it's going to do this, or the probability is going to do that. But whether it's a good investment, as is this P ratio this, or it's whatever that, how is its balance sheet? I have no idea, and I never did really, to be quite honest with you, because even when I traded stocks, I was trading setups based around earnings, because if you have a share in an uptrend with good earnings in a solid market, it's a very CanSlim type thing, and then it gaps up, and then it holds the gap open for 3 to 5 days, 3 to 7 days, trading days. That's a buy. You can come back because you can wait for it to return to a fib level or something like that, and then you can buy it from there. So you're using this very small stop loss, and the average return you were getting a lot of those was around 20% of a move, which is loads. But I found that it just didn't suit me over long term. It didn't suit me mentally.
That's interesting.
Yeah, it's just
because I had. I'm the same as you. I'm a technical analyst and a chart guy. I like to see the price. Okay, the price is the price, and I'm happy to make decisions like that. And part of that is because of my experience in corporate life. So 20 years ago, when I worked, maybe more now and stuff, I was a corporate animal working for C&W. And as part of their kind of career development, they sent me on basically on a fundamentals course. So they sent me on a fundamental accounting course, like a week at their own company college, going through balance sheets, income statements, understanding it, working it all out and stuff, and what it represented, and how you could identify. And the whole idea being that's because actually being able to understand companies that you were looking to either sell into or partner with, etc. And it just so happened that week that was on was the company CW's earnings report was out. And so, having done the work during the week, I think it was the Thursday it came out, we actually listened to the investors call, all right, to the earnings call, etc. And I found it fascinating. Because we'd spent this week doing all this course and looking through it, and then we went through we got to the release, the company earnings, etc., the company's report. And we went through it and listened to the CFO talking to all the analysts in the city. And what came to all of the conclusion of class, there's about 10 of us and stuff, is that what they were reporting to the city and actually what we saw going on with our own eyes inside the company was a complete and utter divergence. What they were reporting to the city was like a carefully constructed pack of lies. It just bore no real resemblance to the day-to-day operations that we were engaged in and working on in the city, in the company itself. So that kind of basically gave me some it kind of punctured any kind of bubble of self-belief in the importance of those numbers. Furthermore, I just so anecdotally knew a few of the guys who were analysts at Banks and Sea covering the telecoms and internet section, and they always basically they marked the company C&W down. Did they mark it down for the numbers? The numbers meant nothing. They marked it down because they didn't like the CFO. They thought he was a blustering oaf. which, to be fair, he kind of was. But they basically, they marked them down because of that, not because of actually what was going on in the company or the balance sheet or the income statement. And it just made me realize it was all just a carefully constructed pack of lies. It was all just a bit of smoke and mirrors and a bit of facade, and not really the way I wanted to operate. And so, hence why, as a trader, the price is the price. I will trade the price, what I see on the chart with my own two eyes, because you can't really. It is what it is in front of you, and I'll make decisions based on that and stuff. So that's how I came to, basically to the land of technical analysis.
Yeah, because I remember I worked in Deutsche Bank a long time ago, back in the last century, and kind of the same thing, because I realized after a certain length of time that it was, first of all, the first thing that, because I was only young, I was in 1998 or something like that, 1999, and it was a big shock to realize that first of all, everything was about share price. It was about nothing else. So everything the company was doing was about share price. And I was looking at a famous household name yogurt manufacturer one day. And that's when I twigged, when I was reading out someone would say shareholder report or something. And then I realized this is all about share price. It's not about products. It's not about anything else. And then it took me a while to realize that it is very much about perception, because, you look at all these things like, Amazon, for instance, made no money for the longest time. I'd say Tesla as well as has up and down things. It's a lot of it is really just simply the perception and the emotional perception. And when I used to be looking at stocks, that's what I used to be reading for. I wasn't reading for the numbers. Now, I trained for 3 years as an accountant, so I can actually read a balance sheet. But I didn't bother, because I was reading the stuff, because you could read the language. You're going to go on Market Watch or Yahoo Finance or whatever it was at the time, and read the stuff, and you could get an emotional understanding of what was actually happening or how the market was perceiving whatever it was.
Yeah.
And that's what I would do if I was caught for time. Now, if I was working in an ordinary job, that's something I would quite do, that I could be able to take time on the bus or my break time and read and start to try and get an emotional understanding of companies. And then it's a relatively simple thing. Then once you have a firm belief in yourself that a company is supposed to go up in price, then it's an easy enough thing to go and buy it, because all you need then is a trend line. That effectively becomes your setup, because you have a belief, and if your belief is right, you're going to win. There's nothing else is going to affect that. So that was one thing. The other thing that always got me with that was you meet loads of people and they go into trading and they want to do a bit of swing trading. And then when they don't have any of that to do, they want to do some day trading on the side to make some extra money. And I think that is dumb, frankly, because you have to be right. You only have to beat the market in one place. That's all you have to do. And it's really hard to beat the market. You have 1% of people who are involved in the market regularly beat the market. So you have to involve yourself in doing one type of strategy, at least at a time, until you get to a part of your career where you are so good at one strategy that you can now carefully go and look at another strategy. Like, I day trade. So now if I wanted to go and do some swing trading on the side, it isn't so difficult, because I have one thing mastered. Well, as much as you can master anything in the stock market, because I never want to...
Yeah.
You never want to overstate your ability in what you're doing. Lost my train of thought there now slightly, but it's do one thing. It's because people cannot handle being bored, and that's what they think that trading is that they will be sitting there for hours and hours and hours bored. But trading is boring. Learning to deal with boredom is part of the cycle of learning how to trade, because it's bloody boring. I'm going to sit up there now for a couple of hours, and if nothing happens, I can't go anywhere. I can't go do anything. I have to sit there and watch my charts, whether something is happening or not, and I will be bored. A lot of the time, unless you have a big popping day, with loads of news. And I haven't even checked the news yet for today. I was doing the stuff I was sending out this morning. Okay. So yeah, I think this could be CPI or something today, or whatever's on. I don't know.
Yeah. You're such a scalper, Ian. You're such a scalper.
Yeah, I guess it's a different way of existing in the market, like, because it is just literally, it's all it's technical. It's technical with some emotion thrown in on top of it because you sort of have to feel what it's doing, and because there's two ways you can trade. There's two ways you can day trade, really, and one my way is my way has evolved to fit my lifestyle because I'm a very time poor person. Um, and so it's to be able to generate, you get those 10 points a day or whatever it is. You're able to generate an income out of those 10 points. It's easy enough to generate an income out of 10 points, not a big deal. Or else you can do it the other way, which is you have to spend a longer time. So I'd have to be there for 6 or 7 hours in front of it. And I'd only be trading because I was looking at them this morning. Like I would have made 4 times what I made yesterday if I did 7 hours and just traded a couple of the big setups.
Yeah.
So it's either time or it's work. Work hard for a short period of time or spend the whole day waiting for something to happen. And at the moment, my life is designed in a way that I have to do the short period of time. Because even if I'm in a trade at 4 o'clock, at 10 to 3, right, I'd often be exiting a trade in around that sort of time. And that's it. That's the day done because I can watch for the next 20 minutes, but I can't get into a trade because I have a 4:30 pickup from school. So I can't get into the next one. Then I'm back here, and then that's your day. I'm going to try later in the year trying to work more in the evenings, but is it really practical?
Yeah. Well, I fully understand that. You and I are fortunate that basically, we can trade full time, so we can manage our day to a point. I appreciate you have constraints, okay, because of childcare, and you're very happy with that. But I do appreciate that there are lots of people listening to this who come across who are trying to trade around their day job, and they're either doing it first thing in the morning before they go to the day job, or at the end of the day at the once they're back home and stuff, and the kids are put to bed and what have you. And they might be looking at kind of maybe 7 till 9, sort of the last couple of hours or last 90 minutes of the US session, or wait until like 10 o'clock until like kind of New York candles close. All right, if you're trading like daily charts and FX, etc. And I appreciate that can sometimes be a challenge. Part of it can be a challenge because you're if you've been up, running a family, going to a day job, etc. Then by 10 o'clock at night, you have probably reached your decision fatigue levels and stuff. So actually trying to do some intraday trading at the end of the day might not necessarily suit everybody, and actually just putting on a couple of end of day position trades, which don't require much intensity. You can check your maths, okay, in terms of understanding your position size and your risk management, and you can put the trade on, and then you don't have to nurse it. Once that trade's on, once it's checked on your platform that the numbers are all right, you've not got a fat finger issue, then you can be done, and that might only take you 20-30 minutes, and so for a lot of people I would say, whilst you can intraday trade after your working day for those last 90 minutes, it might not necessarily be feasible for you because, if you've had a full-on day of work and a full-on day of looking after kids, by the end of the day, your decision fatigue levels. And so actually just putting on an end of position day trade, all right, as an end position trade, and just basically leaving it play out might be the way to work for that. Okay, each to their own and stuff, but I've just seen it, lots of times when people try and trade that kind of last bit of the American session, which can be volatile in itself. And then invariably what happens is, their brain's done, they're a bit frazzled. And invariably that's when fat finger issues come in. That's when basically, you just miss opportunities, or you take scrappy ones because maybe you've had a crappy day at work and you're hoping for a nice distraction, and you're sat at home hoping that basically the Nasdaq is gonna basically bail out your crappy day, when in fact it shouldn't be. It shouldn't be in any way like that at all, should it? As an experience.
No, it shouldn't. And the most successful trader I know works a full-time job, doing something completely not related with trading. And he's a fellow I know for 14 years or something like that. And when he started off, he was the best day trader I ever came across at the time. He was making, because back when I started off, the ES wasn't as volatile as it is now, and he was making, 3 times, 4 times in terms of points more than the next best ones that I knew. And then he went on to so he was working, he got into day trading full time because the company he's working for folded. And so he was caught with no work for a few months and then, took up day trading. And then suddenly he was absolutely special. Like he was quite a special trader. And then he moved into doing basically that. So he trades in the morning before he goes to work. And he's basically trading 60-minute charts, 60-minute trend lines. And but the thing is, the reason why he's successful when like I'm not successful at that particular type of trading, I have my own little system. First of all, he puts on an appropriate, he takes the risk, he takes appropriate risk. So he doesn't, he builds a position, he doesn't put it all on the one go. He adds every 2 or 3 points on the way down for 20 points or something like that. I can't remember what exactly he told me it was. And then he'll hold the other side. So he'll be in the trade for 24 hours, 48 hours. It's very rarely more than that because that's how long it takes to go from the bottom of a range to the top of a range is usually around that 2.5 days. And he just makes a fortune doing it and still goes to work. And I've seen him make his like 3/4. He has a good professional job and he makes 3/4 of his yearly salary in the ES in a week. So, we might be pulling, I'd say, £1 million out of the $1 million out of the ES every year. And probably makes about $100,000 in his professional job. But yeah, he does that and he does that successfully. So it's a thing you can do. You can really do it.
Yeah.
Oh, the last thing I wanted to say about it is that he's a very simple trader. So he's picking a direction. Price is either going up, it's going down. Prices normally will be volatile within 10 or 20 points. So his stop is going to be beneath the volatility. And then he just lets it do its thing. So if you have a real belief, like in the last couple of days now, we had, like yesterday, we were over a daily trend line. There had to be belief that price has gone up. So he just had the simple belief, over the trend line, price has probably gone up. Do the trade, sit in the trade, forget the rest of it. It's just brilliant. He has the mental game of it really worked out well, I think.
Yeah. Less is more,
Yeah, it's a joy to see very simple traders like that do well, following very simple concepts and very simple, they're good craftsmen.
And men do that. Men do that. We overcomplicate things. We think, it can't be that easy. There must be more to it than this. And I've been as guilty of that as others in the past and stuff. But I've been, I hold my hand up to that quite happily. But actually, you get to a point where you realize, what? Actually, less is more. And you just want to be able to make a simple decision: am I a buyer? Am I a seller? Am I sat on my hands? That's it. Get to that point, and find a robust framework that you can repeat that can get you to that point of making that decision, coming to that point. All right. And if you are sat on your hands, there's nothing wrong in that. Being flat is a position. All right. We've talked about this before, haven't we? Being flat is a position, and many times it's the best position if the market is immensely volatile, etc. So I was reading like yesterday, lots of people having struggles in US indices yesterday. So today is a CPI day. It's not unusual the day before CPI, especially A, the day before CPI, B, going into that election debate. No surprise that yesterday's markets were a little bit messy, a little bit scrappy. You just start to understand and learn, they call it patterns of life, don't they? But it is, it's patterns within markets and in the way humans go about their life and about the sort of things that causes anxiety or apprehension or uncertainty, and we all know humans don't really like that. And when humans are uncertain, that is invariably when we sort of start to act and operate in irrational ways and stuff, and which basically leads to crappy trading sessions for people and stuff. So so there you go. So we should also have a little chat about season 2. All right, coming up, shouldn't we, and stuff. And to those of you listening and stuff, we've got ideas. As I said, we're going to talk a little bit about the US elections, okay? Because it is the big event. All right, it's the big event, and so we would take an idea on that. But we've also got a few ideas about things that we want to talk about. But also, we're keen to understand what would help you. For those of you who are regular listeners to the podcast, etc. What would help you? Okay, what would give you a little bit of insight and stuff? Because the reality is, Ian and I could sit here all day, all right, and chat about trading quite happily. But we appreciate that we're a couple of old dogs and stuff and whatever, and we can talk about that and everything until the cows come out. And what we want to do is actually have sessions that are interesting, but also offer a little bit of help and value and insight to you that you can take away and help you in your own trading. It might not necessarily be like a setup; it might actually be more about how you deal with setbacks, how you deal when we talk about dealing with setbacks or dealing with euphoria, but actually how you're just managing yourself on a day-to-day basis. We've both been very open and stuff about, the kind of constraints that we both have in terms of our other commitments, and actually how we have to manage that and work around that. Okay. And so, it can be done. It has to be done. All right. It is what it is and stuff. But what sort of things would you like to talk about, Ian? What do you think would be useful and stuff for us to discuss in season 2?
Well, the first thing I was thinking, I shouldn't pet the cat before I go on this thing, because I was just petting the cat beforehand, and I'm allergic to cats and dogs, and my eyes are burning out of me. Psychology, I think,
the cat not eating it. You're not a Haitian in that you wouldn't have seen that because you don't watch the news. But anyway, sorry, I disrupted your train of thought.
Oh, was it the Trump thing saying about people eating all their cats and dogs or something? Yeah. It's meat.
Things aren't that bad in
Dublin. I always find it bizarre, that people can see the difference, because I'm absolutely not a vegan by any length or means, or a vegetarian or anything like that. And my dad was a slaughterman. I grew up on a beef farm, and I just can't see how people don't see that there's such a big difference. Oh, you couldn't eat the little lovely dog. Well, it's still meat. Yeah. So anyway, so psychology, I think, is psychology for me is always the biggest factor in trading. The rest of it is relatively simple, and it's about it's such a wide topic, because an awful lot of psychology. Like I was thinking this morning that it's a lot of people go into trading as it tries in a way to try and heal themselves by controlling the external world through making good trades. So I make a good trade, I get back from the world what I want, and I can change my perception of myself. And what ends up happening in reality is that they go into trading, and then trading forces them to change themselves, before they actually make the money. So I think that there's a huge amount of stuff in that has to do with that, because I think that there's a huge big thing as well with people going into trading that like, why are they going into it? What's the motivation for doing it in the first place? What are they looking for? Is it some other way? Is there a different way that they could be entering trading? Is there fear? That's another big huge topic, because I think fear is the limiter of everything. If you're afraid to do something, it's such a big huge thing. Simulated trading, I think, is a big thing. It's just because I'm watching guys at the moment simulated trading, and I can see there's nothing but problems with simulated trading up to a certain point, because what they're trying to do is that they're trying it's trying to satisfy a need for moving forward, but they haven't got the ability yet for various reasons, time, energy, finances, whatever it is. They haven't got the ability yet to move forward. A lot of them get mired in it, I think, and then they start making mistakes. It's like very easy to put on a stupid trade, because in the simulator, it's such an easy thing to do. You put on a trade. If the trade wins, good for you. If the trade fails, then, well, it was only a simulated trade. I was only trying something out to see if it would work. It's not a big deal. So I often think guys would be a lot better getting particularly in the European sense, not so much the American sense, getting a spread betting account and doing. I don't know if there's anybody out there that does like 20 cents a point or something like that.
Yeah. So, yeah,
Because
it's certainly in the FX world can be and stuff. But I'd agree with you. The simulator has its place. It's
yeah,
learning a platform, right? Learning the platform, learning how to basically put on a trade and manage a trade, etc. That has its place, all right. But once you've passed that, you need to get into the live market now. When I talk about when I started, certainly in FX, there were no mini lots, there were no micro lots. It was full lot in, $10 a point. Okay, one contract if you're trading US pairs and stuff. And so each trade was between like $200 to $500 a share, a trade place and stuff and what have you. So and I actually looking back on it, that was probably two big positions. Okay, two big. But these days, with mini lots and micro lots, you've not really got any excuse. It could be like, as you say, like 20 cents, 30 cents, a pip, all right. And so, you can have a trade for the price of a cup of coffee. So there's not really any excuse not to have that kind of live engagement, to see how slippage works, to see how your emotions work, all of these things, stuff it is. So, simulator. Everybody's a millionaire on simulator, all right? Because it's easy. Everybody's a millionaire on simulator, but actually, once you learn how to use the platform, you need to get into the fight, all right? You need to get into the fight, don't you? That's the long and the short of it.
Well, what I found is that the difference psychologically between the smallest amount, because I had the same problem. I started off, by the way, just because I was doing ES, and there was only the full side contract at 12.50 a point, 12.50 a tick. And God Almighty, that was tough going because you were going out, and I was relatively well financed when I started off. Now, to be honest with you, but the stress because you couldn't trade for less than $200 a stop, and at the time, because that's only 4 points, and that was tough because it forced you then on the other side of it. Even if you were making money on the other side of the trade, you were going to close out early. Because you easily could have lost, because you had the two things. You'd lost you'd done one trade and got stopped out. So you had 200 gone in the morning, and your focus of the day is to get that back. Because $200 at the time when I started off would have been like a day's wages for a good day's wages for a lot of people. And it still is a good day's wages for a lot of people. I think as well, the difference between going from sim to live is bigger than going from tiniest position size possible to, I can sustain myself at this position size. I think it's a completely different psychology, I think, going from simulator to live. And I think the other thing too is that it creates a record which you cannot dispute, because you're in it to make money. And so at the end of the week, you either have, even if it's $10 or $20 or 20 euros, whatever it is. Like, because I remember I had one for a while, which was, you could trade the ES for like 30 cents a tick or something. So, at the end of the week, when you were practicing with it, you were 20 pounds, 20 euros, whatever it was, whatever currency it was at the time. But you had a record. You had a record of success, and you had a record of failures, and you couldn't explain them away. You couldn't gamble them away, which is something that people do on the simulator all the time. They just gamble. So, I'm down $10,000. Well, let's just put it all on black and see what happens. All those kinds of things. Like, so it's it's a great thing. The simulator is a great thing, and getting off the simulator as well is not an easy process. Like, what I did is I used to take out a certain amount of money mentally, and then I would go live until I lost that money, which could take anything from 2 hours to 2 weeks. But and then go back to the simulator and have a little rest, and then regroup myself and see what went wrong, and then make the long march back to the live account again. Because I didn't, it was a process to get properly live. And now you're so blessed, like with these mini lots, like, because you can just, even if you're having a really bad time, just go to mini lots until you recover yourself. Like, it's a great thing. These $5 points.
Yeah.
Although I'm saying that the fills can be a little bit dodging them, and the fees are actually quite high.
Yep.
So you can find yourself, we say, making 2 points and getting 2 ticks out of it sometimes. So
that's it. There's ways, you have to adapt to your own particular, your own particular market, your brokerage, depending on whether you're spread betting or whether you're doing futures, etc. And maybe that will be one of the sessions we could do on really, and just basically managing simulator, managing live, managing the kind of the ups and downs of that of the process and stuff. Maybe we'll do that as another session and stuff, so where we can do that. But it's probably not a bad time for us to draw to a close. All right, so here we are.
Just I want to say one last thing. Just want to say one last thing about simulated accounts. One of the biggest problems that I've come across when dealing with people is that you get the perfect price every time on a simulator. So you get the price the last time it traded, regardless of what was happening. So if you're live and you hit in that market, get out, you're not getting that price. You're not getting the price you see on the screen. You're getting whatever is at market. And that can be significantly less. So if you're, particularly with guys learning scalping, like there's one fella I had and everything was based on the only way he could succeed was on fills, but the fills were unrealistic live. So you're sitting there at one point trying to explain your system won't work because you'll never get those fills consistently. And he never wouldn't believe me. Which anyway, that's another also around.
There we go. There we go. All right, cool. All right, well, listen, let's draw it to a close there. Next week's session, episode 2, is all about easing yourself back into trading, which could be after like the summer break that we've had, or it could be after an enforced break for whatever reasons. I've had enforced breaks at times and stuff. And it's just a case of sort of sharing what goes on there, what you need to be aware of, what you need to plan for. But as I said, you are very welcome to contact us if there's something you'd like to see us talk about. If there's something you'd like to see us covered, by all means, we'd love to hear it. Okay, we always enjoy the kind of comments from fellow traders. Until that time, trade well, everybody, and thanks very much, Ian. We'll speak soon.
Bye bye.